Did you know that you can retire on Tesla stock in 2025 just by owning this many shares? It is no secret that a lot of people are eyeing Tesla as their means to retire early. Make sure to stay tuned and keep watching to find out how. No one will really pass up the opportunity to retire early, and a lot of people believe that Tesla is capable of allowing them just that. Despite its current performance in the stock market, investors remain bullish on the leading EV company. In today's video, you will find out how many shares you need to retire on Tesla stock by 2025. In the last quarter of 2021, Tesla shares are up more than 50%, and the company's market cap has grown to more than $1.2 trillion despite some recent hiccups. A $1,000 investment in November of 2020 would be worth around $2,940 only after a year, representing a return of 193% according to CNBC calculations. So if you had invested in Tesla in the said year, when the stock was worth just over $400 a share, you would have nearly tripled your money. Go back a few more years and your return would have been even greater. On November 2, 2016, Tesla was trading at around $38 per share, so a $1,000 investment then would have grown 3,025% and be worth around $31,286 in 2021 alone. Over the same period, the S&P 500 index would have given you a 142.4% return. If you had invested in Tesla in 2011, you would have a 5-figure return. Over those 10 years, Tesla went from selling just the Roadster to offering models S, 3, X, and Y. It has also announced the Cybertruck and Tesla Semi, but has remained non-committal about launch dates for both vehicles. A $1,000 investment in Tesla in November 2011 would be worth over $204,000 now, with the stock's price increasing from $5.74 to $1,229 over the years. That's more than a 20,000% return. A similar investment in the S&P 500 would have given you a 357.4% return. Of course, that is not to say that the S&P 500 is a worse investment. In fact, most experts, including legendary investor Warren Buffett, say it's the best place for most people to put their money because it holds every stock in the index, making it automatically diversified. Still, it is undeniable that Tesla has had periods of dips, and there is no guarantee there won't be more. However, experts predict the anticipated dips in the future will be minimal. Tesla fans and critics are still in an ongoing debate as to whether the company's stock is overvalued or undervalued. However, the company's performance proves that it is not quite overvalued as most think. In fact, Tesla has partnered with other companies to increase production and boost market outreach. Adam Jonas, global head of autos and shared mobility research at Morgan Stanley, revised the price target for Tesla shares to $1,300 from $1,200 and predicted that the delivery figures would reach $2 million this year. Like Jonas, Mark Delaney, a Goldman Sachs analyst, said that he raised his price target from $1,125 to $1,200. He also placed Tesla stock in the outperform category, as well as called it the best idea in the electric vehicle sector. Even Credit Suisse analyst Dan Levy reiterated his bullish stance on Tesla stock and raised his price target to $1,125. He said the share's recent fall is an attractive entry point. In fact, Levy expects Tesla to beat Wall Street's expectations. Even Kathy Wood, an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invest in innovations like self-driving cars and genomics, set a $3,000 price target for Tesla by 2025. One analyst predicted Tesla stock to trade above $2,500 by 2025. While believing these predictions and valuations are under one's discretion, they cannot be discredited altogether since they were made after exhaustive study and careful observation of the EV company's stock performance and future potential. In the past 2 years, Tesla reported an increase in its vehicle production and delivery. It even exceeded consensus estimates after delivering 108,600 vehicles. The increasing number of orders and consequently deliveries show that there is indeed a high demand for these cars. The increase in sales is expected to have a positive impact on the leading EV company's stock price. If that happens, Tesla's stock price will consequently increase as well, and by 2027, there may be a massive profit enough to allow investors to retire with it. What do you think about investing in Tesla if you haven't already? Share your thoughts in the comment section below. It would be hypocritical if one was to claim that he does not look forward to retirement. However, only a very few actually make the effort to stay financially capable even after retirement. What most do not know is that to be financially secure after retirement, they need established financial backing from profitable investments, and putting money in growth stocks may prove profitable if they invested in a high-value stock with good gross potential. That said, how many shares should you have to retire in a few years' time? According to a survey, an average person needs around $1.7 million to retire while maintaining their standard way of life. Assuming that Tesla stock ranges around $2,000 by 2027, you will have to own 850 shares by now to retire by then. That much is about $600,000 with the current Tesla stock price. Investors can only hope that Tesla lives up to its high expectations. Well, it is quite evident that the EV company is doing its best to prove itself successful, both from investors and critics alike. In fact, Tesla has a lot of innovative projects lined up. One of them is Tesla's plan to build a sports car and use that money to build an affordable car, then use that money to build an even more affordable car. Alongside that is their plan to provide zero-emission electric power generation options. Tesla also plans to transition into an artificial intelligence and data company. After all, Elon has repeatedly stated that Tesla will be thought of more as an artificial intelligence company than anything else. The company has been focused on solving real-world AI and more recently introduced the Optimus humanoid robot on AI Day. Additionally, according to ARK Invest, Tesla's prospective robotaxi business line is a key driver by contributing 60% of expected value and more than half of expected EBITDA, or earnings before interest, taxes, depreciation, and amortization in 2026. Across the simulation set, they expect electric vehicles to constitute 57% of the company's revenue in 2026, although at substantially lower margins than the robotaxi revenue. By now, Tesla has arguably made a name for itself in the industry, and based on its performance despite the dip, it appears like the EV company will continue to perform well. For this reason, Tesla may just be a good retirement plan in the not-so-distant future. Many Tesla bulls believe in the company's vision of a cleaner, more environmentally friendly planet and want to retire rich as loyal Tesla shareholders. According to annuity.org, the median American retirement income is around $47,500, which means one will need at least $4,100 per month to retire comfortably in a Western country such as the United States. Now, if you live overseas or plan to retire in a foreign country, then you could retire with a lot less money. Many Americans choose to retire in foreign countries such as Panama, Mexico, Costa Rica, Portugal, or even Thailand to take advantage of geo-arbitrage and stretch their retirement savings much further. However, assuming that you prefer remaining in your current country and need at least $4,000 per month to retire comfortably and want to retire by 2030, then the minimum amount needed should be increased to around $50,000 to adjust for inflation. Using a standard 5% withdrawal rate, you will need at least $1 million to generate $50,000 a year in retirement income. If you continue spending 5% of your retirement savings, then your money will last you 20 years if you earn zero additional income once you stop working. The great news is that Tesla shares will appreciate in value over time if the business remains strong, so your money won't run out for a long time. Investing in Tesla stock is probably the smartest idea at the moment for investors who want to stop working by 2030. Adam Jonas said that the company was a winner in the electric vehicle race. He said that the current landscape for electric vehicles was a race and that Tesla was winning it. Think of the EV race as a marathon. He wrote, "Tesla is in the lead at mile 21. Everybody else is at mile 2 or still tying their shoes." Watch our other videos for more Tesla stock content.